following is an update and technical analysis on Applied Digital Corporation, a company of the financial services sector in capital markets, here off the Daily Invol, where I'd mentioned in the short sale watch list on the 9th of August 2023, we're trading spot price $7.25. And I had mentioned how unique and imperative this concealed, reactionary, hidden uptrend line cut right through the gap off of June of 2022. Multiple wick reactions right across that inflection point, and it was spurred with a ton of reaction right across the entire spectrum. You had a couple additional reactionary lows, failed, put in that sell signal, back tested that key inflection point, hidden uptrend line, and it was met with a strong wave of selling where you had this additional reactionary low uptrend line of support here. Additionally, additional support with additional reactionary highs just completely rejected again, and was just sold off impulsively for more than double-digit crashes. So talk about 30, 40, 50% crashes down to the upside, where we ended up gapping up, had a nice clean gap up right across, and that's how these hidden primary uptrend lines work, where they're highly dedicated to algorithms, computer machines, more so out of the realm of the retail trader. And it was back tested really to the button here, which was the technical catalyst for a large wave of gains to the upside, call it more than double digits, again, right off that hidden key inflection point. And then again, back tested again here, double digit gains, reactionary low, additional reactionary low, and then a multitude of additional reactionary lows for more than double digit gains again, right off that key inflection point. The way these concealed hidden uptrend line and or downtrend lines operate is through just a huge wave of volatility in each direction, whether it's a break to the downside or a break to the upside. Well, really what had happened is as soon as we broke to the upside there, we put in a nice divergent high with negative, jagged, bearish and negative divergences really constructed amongst all three key technical momentum indicators with confirmed bearish crossovers in the oscillator and histogram. With the histogram oscillator already printing red candle closes below its zero line thresholds there, and I had just initiated that it was a complete back test. Additionally, with the call it dual resistance at the 807 price resistance coinciding with the hidden uptrend line off just a wave of volume profile at zone at price indication, that was a breakdown confirmed sell signal. And here's the update off that 725 price spot price inflection point. The entire trade thus far has been good for called a 16.3% crash, and we are honing in on that $5.94 price support, which is initially the first target there, where bull traders, long traders, they need to step in really aggressively. And they called that additional multi-year reactionary highs and lows right across the board. Pretty significant price support level that needs to be defended. Whereas you have a breakdown below that key inflection point will issue in a much larger wave of selling, in my opinion, down to the 492 price support level, and then additionally needs to hold a corresponding with the 200-day moving average. And if we crack and pop that level without even having a snapback and or counter trend rally, which is potential, which could be a potential transition above that 594 price support, and then additionally finally breaking through. And if we take that level out, it'll be an unfilled, backfilled gap down to the 342 price support, which would be more than a 52% crash there, which will correspond with the primary reactionary low uptrend line here off the July 2022 lows. And that will be the mother of all key inflection points to watch and hone in on for any health to be regained at all costs through any long traders and or bull traders and or dollar cost averaging long-term investors. We are at a key pivotal inflection point, and only time will tell if we slam right through it, set some stops up above, have it a free trade, and try to gun for the home run down to that price support level in an all-out frenzied scramble for the exits.